In 1901, at Spindletop Hill near Beaumont, the future of Texas changed dramatically as, like a fountain of fortune, thousands of barrels of oil burst from the earth towards the sky. Soon, Detroit would be cranking out Model Ts by the millions, and America was on the move, thanks to the black gold being produced in Texas. Now, more than a century later, the vehicles are different, but nothing else has truly changed. Sure, there may be many other alternative energy sources like wind and solar and electric. But let's be honest, America depends on oil and entrepreneurs, and if the USA is truly going to be independent, it has to know the crude truth.
Hey, everybody. Welcome. We've actually got a different kind of podcast today. My name's Stu Turley, President and CEO of the Sandstone Group, and I've got some fabulous guests here. Let me introduce RT Trevino. He is the podcast host for The Crude Truth. He is an EMP operator, big dog over there at Paco's Operating. Welcome, RT. How are you?
Doing well, Stu. Thank you very much, and exciting to do this little collaboration with you today. Very excited about you bringing on the next guest. So,
fantastic!
Yeah.
Sorry.
I'll say, without further ado, keep going. I'm too excited.
Yeah, we're going to have some fun here. We got Mark Perlberg. We've had the pleasure of just starting to get to work with Mark and understanding his CPA licenses. We are getting so many questions about 1031 exchanges, people wanting to get out of real estate, wanting to find out what's going on. And just as a real quick note, like Occidental Petroleum last year was the number one on the Fortune S&P 500. So people are really wanting to know what's going on, what's eligible in the energy space. And I think we're going to have a fantastic discussion. And Mark, you're the founder and CEO of your CPA firm.
Right. Yeah. So I'm a CPA, founder of Mark Perlberg CPA. The name may have changed by the time you've listened to this, but you'll be sure to find me. We specialize in advanced tax reduction strategies for high net worth individuals, real estate investors, and entrepreneurs. We also do tax preparation, bookkeeping, and all those things. But our specialization and what makes us unique is we work with clients to create tax savings.
I like, Mark, I'm sitting here, and for our podcast listeners, I love the way you're doing it. You're actually getting after it almost like a New Yorker, but you're now in Atlanta, I believe. And we all have to talk. RT and I have known each other for quite a while. We all talk with our hands. So, if you're listening to the podcast, you got to jump over and watch it on YouTube on that. So, Mark, I'm going to go ahead and throw this over to you to start the dialogue and what you're seeing in the marketplace for the 1031 exchanges, or what are you seeing for the main concerns in this market?
So I wouldn't say that. Okay, let's talk about what a 1030, obviously I'm going to assume here that some of our listeners have a very basic understanding of 1031s. So at a high level here, 1031 to avoid and defer cap gains, right? You have to, when you sell a property, you have 45 days to identify a replacement and 180 days to complete that transaction of a new piece of property. It has to be real estate. And now you're deferring the gains. You could save, in instances, we save tens of thousands, hundreds of thousands, and millions of dollars for our clients with this strategy. Now, here's the challenges. You can only exchange real estate for real estate. And a lot of our clients, they're having capital gains events, such as one of my client that's working with you guys. Now, people are selling their real estate for all different sorts of reasons. And a lot of people are complaining that they can't find any good deals. The market is overinflated. I'm afraid of an economic collapse. There's no good deals out there.
Right. So
that's one of the challenges, is just finding the replacement property. And then they're not aware of things. Our client did an exchange into mineral rights, which gives them the opportunity to not even do anything and still defer the gains and see cash flow coming their way. And you're deferring the gains indefinitely. and potentially forever if you hold on to that land. Now, here are some solutions. So I'm going to go on a little bit off topic, but there are, if you're working with an advisor who understands capital gains planning in 1031s, there are some potential solutions. You could do multi-asset 1031. So let's say your replacement property doesn't have enough value to replace. Let me backtrack. Your replacement property has to be equal or greater than the sale of your property. Well, let's say you really want to buy something, but your sale is 700,000 and your replacement property is only 400,000. You think you're out of luck, right? Well, that's not the case. You can do a multi-asset 1031. So let's say this new rental property, or it doesn't even have to be a rental property. It could be a business, real estate for your business. It could be self-storage. It could be a farm, just real estate. But let's say you still got $300,000 more to deploy. You can put that $300,000 into the mineral rights of this land that you're going to own. So you do a multi-asset, or maybe you can roll it all into there. Or maybe you can structure this with a reverse 1031 exchange, which a lot of people don't realize. So when we have a hard time finding the deals, we know we're going to sell our real estate fast. We know we're in an appreciated market and we have a hot deal. Right. We're not too worried about selling the real estate. We know it's going to sell, but the hard part is finding your replacement property. So you can do a reverse 1031 exchange. You take your time until you know you've solidified your replacement property. So you found the ideal property that you want, and now you have 180 days to sell your property, which you know is going to sell. So now you're not under all that pressure to identify and sell your replacement property with that 180-day timeline. You're not worried about the deal dying as much. You more are in control of the situation, and now you have two cash flowing properties over the course of the 1031. So lots of cool stuff out there.
Oh, nice. And then I like that. I was sitting here thinking of a question mark, and it was kind of like, is this anything like a reverse mortgage?
Not quite. Different concepts, but the ideas are that you're just switching up the order. You buy the replacement first, and then you sell the property.
Nice. Well, RT, you're the EMP operator and visiting with them as well too. But what are your thoughts on what Mark just put out there?
Well, first of all, any entrepreneur, any high-level individual, I definitely recommend first and foremost to get a CPA like Mark that does these advanced tax reductions. I mean, there's a difference between and I don't even want to compare him to those guys, but there's a difference between somebody that got a degree in accounting, and then there's a difference between those guys that do this and what Mark and his team do. They really go in, they work with a lot of people that are high dollar entrepreneurs that are always looking for ways, because who we kid, even the former president said it best. He spends millions of dollars a year to save millions of dollars a year on his taxes. So Mark and his group there at the Mark Perlberg CPA are really a great place to be. But no, as an E&P guy, exploration and production operating in the oil and gas industry, there are several ways, and the way that we started out in the business was by drilling oil wells for the tax deductions. However, as we've gotten bigger and our assets have grown, dare I speak, those baskets have always expanded. Right now, the real estate market is not the hot topic that it was 6 months ago. And, like Mark said, people are still buying, but a savvy investor is having a hard place to go put their money after they sell. So a 1031 exchange into any form of an oil and gas asset has really turned into a great place to park their money until the next project comes around.
Yeah, and the cool thing is that there's lots of these opportunities available. You don't have to worry as much about a deal dying. And a lot of people, what I have found is, when we had our former president was a real estate investor, we had 100% bonus depreciation. It was just a really easy time to make money and cut your taxes. The bonus depreciation is phasing out. And a lot of people are finding that it's getting harder and harder to find good deals and that are cash flowing, especially in the short-term rental space where we see a lot of clients. So, and then a lot of finding they hate being landlords. So a lot of the, I thought this was passive income. People are calling me because their stinking toaster is broken.
Yeah.
So this is more of a legitimate passive investment vehicle.
Mark, what I call it is because, we've had several rental properties and we've transitioned into 1031 exchange into minerals and income producing properties. And what I call it is that there's no TNT involved, no toilets and no tenants. And it's the epitome of, of what that real phrase mailbox money is. You're not worried about, again, like you said, is the toaster broke? Is the light out? Is the AC out during the summer? Is the heater out during the winter? No, because guess what? Oil and gas is working 24/7. That's one of the best things Warren Buffett has ever said. You need to make money while you sleep. And so with an investment in an oil and gas 1031 exchange, you truly do not have those headaches, so to speak. And because also you have Fortune 500 companies like Occidental, like the Exxons that are operating some of these leases. So they know what they're going to do and they have to keep their investors happy. So guess what? That means that they're actually working, quote unquote, for their tenants, if you will, to make sure that everything stays just right.
Yeah. I mean, and I think it's a really cool idea when you look at how all this comes together on the 1040, because real estate investing is a passive activity vehicle.
Yes.
And you have a lot of our clients who are investing in real estate. If they don't have real estate professional tax status, they're not even using their losses most of the time. And they have all these deductions that are just sitting on their 1040s and being pushed forward and not even being used. And then when you have a passive investment vehicle that is going to generate positive passive income, you're finally going to have the opportunity to activate these passive losses to offset the cash flow from these other activities that what I call PIG, passive income generators.
If I may, Mark, let's say, let's give some examples if you don't mind. Somebody has a property. We're going to give them a hell of a deal here. Somebody buys a property for $500,000 back in 2008. And now it's worth, for easy numbers, it's worth $1 million, and they just can't find that next property. So they roll it into a 1031 exchange mineral income producing property that's now on pace to earn about 30% this year alone. How would that work with you and your team going throughout the year with their taxes, for their deductions, and the way it would look on a tax revenue statement, so to speak?
Okay. So the first thing we would think about here before we even think about 1031, and this is why it's so important to have a knowledgeable advisor here. It's just like you wouldn't want to do your own root canals. You don't want to do your own tax planning. I love Bigger Pockets. I love all those sites, but you need to talk with someone who's done this stuff. First, you want to make sure that there's actually taxation on this capital gains event, which it looks like there likely is. There might be instances where a 1031 doesn't make sense because you have suspended losses, or you're in a $0 long-term cap gains bracket, or maybe you have stock losses offsetting the cap gains. But let's assume here we have taxable. We're avoiding here potential $500,000 of capital gains tax. Now, if this is long-term cap gains tax, is not just taxed at 15%. Eventually, it's going to be taxed at that 20%. And then you have your 3.8 net investment income tax. And then you have state taxes if you do nothing. And the state taxes are usually taxed at the same rate as your regular ordinary income tax. So we're talking about potentially up to like around a 30% tax liability. And if you're in California, just double that, all that. Because California they just love to tax you. I'm exaggerating. They wouldn't double it, but the California taxes can get really, really high.
Yeah.
So you're avoiding all of these taxes here when you do the 1031 here. And now you have let's say you're cash flowing 30%. We're talking about $300,000 of passive income. That's taxed at your marginal rate. You're not paying self-employment tax. You're not paying that 15.3% FICA. And now let's say you have other rentals now, right? So let's say you have a strategist looking at all your other sorts of activity here. You can maybe now think, well, I never had rep status. There was no purpose in doing cost segregation. Well, let's take this rental property, do a cost seg, and create passive losses from the rental activity to offset the cash flow from the oil and mineral rights that's passive. Or maybe we take some of this profit and we dump it into, if we want to reduce our taxes, we can dump it into oil and gas mining wells, which will reduce your taxes as well. But overall, what you're seeing here is at the end of the day, you're seeing that mailbox money that's going to be tax advantage regardless, because it's passive income and you're avoiding the self-employment taxes.
Now, another question is, Mark, that with you mentioned that, hey, you're going to be taxable for about 30% tax liability. With any type of an oil and gas investment, you can write off up to 15% of the production itself. So that could help out as well, correct, against those tax liabilities?
Right. So if you get a K1 where if there are expenses, and some of these, in some instances, and correct me if I'm wrong, but you still have other deductions that could be non-cash deductions like depletion.
Yes.
There's no additional cash leaving the partnership that you have ownership in, but you're still getting a tax deduction, which will reduce the taxation on your cash flow.
Yes, that's correct. Yeah, there is definitely the depletion that is involved as well. And that is part of the production, because it is a good, better, and different. It is a depleting asset in some form, and that's how you can do that. So yes, that is correct, Mark.
Yeah. And how about this? Let's say we reduce your taxes so much with this cap gains deferral on the 1031. And let's say you were a full-time investor and you're just offloading all your real estate. We bring you into such a low bracket. You say, hey, why don't I take some of this 401k money and put it into a Roth and have the Roth invest in some of these mineral rights, because I've used the 1031 and other strategies like cost segregation to drive us so low. And now we grow it tax-free in the Roth, and we eliminate capital gains in the Roth.
Wow, that's even one I've actually never really kind of thought about. There would be doing some oil and gas through a Roth IRA. That would be pretty big right there.
Yeah. Or even things like, if you want to get really sophisticated, you can incorporate spendthrift trusts and irrevocable trusts, right, which have more flexibility than a 401k, and you can pull the money out before you're 60. All sorts of really cool things when you get into higher income brackets and have an opportunity to be resourceful and creative with different structures. And again, just looking at the mix here, and with a qualified advisor, what's your W-2 income? What's your business income? What's your active income? What do you have the opportunity to create spin-off entities if you really have an opportunity to be resourceful here?
Right.
How does all this stuff come together in your 1040? Where are you now and where you're going? And where are some tax planning opportunities, and where are the tax implications to really optimize the growth of your success here? And what are you going to do with your cash? You're getting these distributions. You can invest it into other tax reduction vehicles.
Mark, and RT, last year when we were talking to our investor clients, when California Governor Newsom, you got to love him. They put that law out there that they could reach out and grab you even if you left the state. Yeah. So when you left the state, they're going, hey, you sold something this year. So planning ahead with a CPA makes a huge difference to protect you from getting the Governor Newsom to come grab you out of California later on in the year, right?
Yeah.
Yeah. I mean, we see a lot of people moving from California to Texas, and in those instances, we consider that in the timing of events. So if you're going to do, a Roth conversion or certain activities where we can change where we're going to assign that activity, and these are things a lot of people are going to miss if they're not in regular communication with the tax planner.
Wow.
Now, New York is the same way. I mean, you take a look at New York, both New York and California seem to like take pride in who's got higher taxes. So, and people were going nuts last year when we were talking because they were coming out of making money and actually 2 years ago when they were really making money, when the former president was there. Who are some of your clients that are talking about this? Are they from California? Are they from New York?
Yeah, I mean, we have clients across the country, and California is the greatest challenge I've seen. Now, believe it or not, there's some challenges we see in Tennessee with what's called a franchise and excise tax, where you got to do some additional planning. But California, I believe it's a 12.5 or a 13% top marginal bracket in California, which is crazy. Yeah. And here's another crazy thing. California doesn't recognize the real estate professional tax status. So if you're doing a cost seg and bonus depreciation, all that wonderful stuff, dropping down your federal, you're not going to see that benefit on your state taxes.
Wow, I didn't know that.
Yeah, that we found out, our clients found out the hard way on that one when they saw the California bill there, and California will still tax you on income earned in other states. It is a tough situation there if you're in a high bracket in California.
Wow. Why do people even want to live there? I'm blown away. I'm sorry. I mean, look, it's beautiful. Wow.
Yeah, I mean, if you want to work in Hollywood, I get it. The weather's nice.
I get it. People say you can surf in the morning and ski in the evening, I guess. I mean, that's what I've heard. But now I do want to switch it back. With minerals, Mark, I don't know if you get this question, but sometimes people ask me, it's like, do I make money and does the value of my leases go up even though I've got wells that are producing oil? And I say, absolutely, those go up. So it is a lot like real estate to where, the value as the production goes up, your leases do go up, so that if it is something you did want to exit from, you could actually sell that at a capital gains and then roll that into something else. Is that correct?
Yeah. So, if you have a capital gains event, you could 1031 into that, or maybe you find an incredible real estate deal. You can 1031 back into real estate investing. You can also defer capital gains inside a qualified opportunity zone fund. I've heard of some qualified opportunity zone funds having oil and gas mining wells and oil and gas activities. It's not as common, but you'd be surprised. Occasionally, you'll find instances where qualified opportunity zone funds are not just for urban development. It's areas where they just want to encourage economic activities. So, and then, hey, if you get your funds in a QOZ, it's like a supercharged Roth. You hold that money there for 10 years, and then you don't have to wait till you're 60 years old, and you'll never pay taxes on the cap gains there.
Wow. I wonder if, so some of those small towns that they're trying to get growth in could qualify as an opportunity zone to go either drill or, more importantly, produce oil.
Yeah, I've heard of it. It's not as common.
Yeah.
But you'd be surprised at how much of the country is in a qualified opportunity zone fund. A lot of people say, "Oh, that's just where the low income people are." But you actually will find rural areas that they're trying to encourage development as well.
Man, I'm writing down a few notes. You're hitting me with you're dropping some truth bombs and knowledge on me today. I appreciate it, Mark. And again, that just goes wide to all our listeners out there, why Mark is the guy for any entrepreneur out there. I mean, these are the type of things that he is looking at on a daily basis for his clients.
Yeah, I've been dying to talk to people like you, because these types of opportunities are there. They're lucrative, profitable, tax advantage vehicles. There's so many ways that we discussed that you can really build wealth and win the tax game when you combine this with a bunch of other strategies like real estate investing, cost segregation, bonus depreciation, qualified opportunity zones, retirement accounts, and timing, and all these things. And it's exciting to see when all the unique ways on how this all comes together when you can be resourceful and strategize.
Right. Mark and RT, it's always important to use a professional.
Yes.
So, and what I've done in other areas is we have nice resources for double checking deals. And RT can, back this up. Not all oil and gas deals are created equal. And so being able to have the resources to look at the individual play, look at the individual area and who's actually the reserves, take a look at how much oil and gas is in there, be able to take a look at the markets, and be able to say, hey, wait a minute, why is oil and gas going to be a good long-term play? Why is it going to be here? Because I was visiting with some investors last year, and they were sitting there saying, why should I invest in oil and gas? Because the Biden administration is going to kill it. We're going to need oil and gas for a long time, even when we do go renewables. So, you need to be able to balance that out with the right experts. So, I rely on very great people in my staff, as well as EMP operators that I trust, like RT and Paco's operating. And so you really balance that out, Mark. And we say, hey, wait a minute, use an expert.
Yeah. I mean, there's obviously, you want to make a good business decision. It has to be profitable. But
Right.
with all the tax saving opportunities, with what you can do with this, and with intangible drilling rights being tax deductible as well, we have so many people just who don't, all they think about is stock market real estate, which is fine. But
Right.
this is something that I think a lot of people are missing the ball on. They're completely overlooking this, because I think part of the reason why is they don't understand the tax savings, and they don't understand the business. So they're like, because you hear, I mean, you flip on the news channel, you'll hear plenty of people talking about stocks and stocks going up and down, and there's something they're familiar with, and real estate as well. But people just don't understand it enough, and because they're not connecting with guys like you, and now they're missing a lot of opportunities.
RT, you and I have talked to some other folks in the last even quarter, and when you talk about being able to say, I've got one, and Mark, I loved your example of having a deal break out into multiple kinds of things. So you can sell, and I'm trying to get my head around how to articulate this. And that would be, so you sell a property and you make your capital gains, but there may be other gains or other things that you need to write off. And so RT, are there deals out there where you can combine the tax revenue from a royalty fund with an EMP? Because there's two different real tax savings for investing in oil and gas. And so when you take a look at am I making sense where I'm going on this?
I think so. And, first of all, it's great to know that you can do a multi-asset 1031 exchange.
Right.
And so there are ways that you can definitely go into all facets of oil and gas investing to actually get the best tax savings that you can while continuing to build your wealth. So yes, there are ways you can do that, Stu. And one basically can benefit the other, and then the other can benefit the one. So there are some really great ways that you can basically, again, part of the reason why we started this was not to pay Uncle Sam. So there's a reason why they already get us enough. So but there are ways that we can combat that in other ways. So yes.
Here's another idea. Now, let's say you missed the boat on 1031, didn't know what it was. You have capital gains you're worrying about here. have back to the same example, 500,000 cap gains. If you were to roll the funds into a vehicle where you get the intangible drilling rights at 90 cents per dollar here, we're talking about a $450,000 tax deduction. And the tax deduction, when it's non-passive with intangible drilling rights, under certain circumstances, may be more favorable and beneficial than the tax than the deferral of cap gains in certain instances. So there's still opportunity. And even, if you have 180 days to do to find your qualified opportunity zone fund, you don't have to identify the property. We have clients who sold their property in December. Right now it's March. They still have opportunity to identify QOZs, which may have, in certain instances, oil and gas. And then in addition to that, you can still find ways after the fact to maybe free up some cap losses from your stocks.
No, it's another great way to defer your capital gains tax. And then, through a drilling deal in the oil and gas side, you can write off up to 90% of those intangible drilling costs. And then with that 15% in depletion or your production, you could per year, and I said it per year, write off 100% of something like that. You're absolutely right, Mark.
Yeah, think about this. When you sell that property for $500,000 and you probably have a principal of $1 million, so you have $1 million just chilling in your bank account right now. Right. So you can invest not only your capital gains amounts, but some additional amounts into these oil and gas mining wells here. And not only can you offset the capital gains, but you can use it to offset whatever taxes you're paying out of your W-2 right now.
Yeah.
Wow. You know what? I'll tell you what, Mark and RT, this is absolutely a fascinating discussion. And I got an idea here. I'm going to throw this out here. And I think that, Mark, we need to have a webinar coming up around the corner for everybody. And we're going to have it and schedule it for live questions and everything else. So I think we're going to get that on the books, guys.
I think that'd be a great idea.
Yeah, I think that would be so much fun because you guys can show me, what's the capital contribution into this, what's the ROI, what's the cash coming in, and then I'll talk about the tax. How is this taxed? How can we eliminate? How can we use this to reduce taxes? And all sorts of fun ideas on how to really win the tax game with these investment vehicles.
I like that. And we can come up with some really good working examples and numbers and really kind of try to flesh all that out. So, Mark, I'm going to start with you. We've only got about 5 more minutes here. And then tell me what's coming around the corner for Mark Perlberg CPA.
So I'm eventually changing the name because we have a decent sized team and we're becoming more of an organization. And we're kicking butt during tax season. Like we're going to file, maybe 80% on time, which is really good for a firm that does business returns.
Yeah. Right.
And so we're going to have more time to consult with our clients and collaborate with them instead of just giving them their returns. We really improved our processes. So we're going to be doing some quarterly consulting. We're exploring some new and more advanced tax strategies, including those involving trusts, life insurance, also some strategies for college planning that are more advantageous than 529s and allow you not only to save a money tax advantage in tax advantage manners, but also to reduce the tuition that your children will be charged based on how you report your assets. So a lot of opportunities with that and talking about maybe enhancing some entity structures here. So we're going to have a lot of fun talking about all these topics and just continuing to make content and connect with as many people as we can.
Well, that sounds fantastic. RT, all of us being podcast hosts, and we're trying to go through all this kind of stuff. It's amazing 3 people that are passionate about each individual's little area can actually get a word in edgewise around here. This was almost entertaining from that standpoint that we didn't step on everybody. But RT, what are you coming around the corner and seeing on Pecos Operating and the Crude Truth?
Well, we've got some great guests lined up on the Crude Truth, trying to get a new episode out every week. But also, I want to give Mark just real quick an opportunity for our listeners and viewers out there to check out your podcast, Mark. What's the name of it again?
All right, it is the Mark Perlberg CPA podcast. It's spelled Perlberg, Mark with a K. And you can also find me on YouTube and every other social media platform.
Can you believe 3 podcasters actually listen to each other? Wow.
Hey, heaven forbid we learn something new, right? Heaven forbid. And I know I definitely learned some new things today with that qualified op zones because I've heard about it for real estate in the lower incomes areas, but as a drilling project, that'd be awesome. But no, we've got a few reworks that we're doing, a couple of completions at Pecos Country Operating. We're also reviewing some new minerals that we're looking at adding to our portfolio as well. But you can always catch me, on LinkedIn or at the Crude Truth show at gmail.com, or even I think PC operating at gmail.com. Reach out to us and definitely check us out on my podcast, The Crude Truth, and also 3 podcasters walk into a bar, a little bit more laid back, talking about oil and gas and energy.
So yeah, this is actually the second time 3 podcasters actually get in and act human to each other.
There you go. Exactly.
Well, with that, we thank everybody, because this is going to go out on the Mark Perlberg channels, as well as the Crude Truth and the Energy News Beat. So for all of you guys, thank you very much for stopping by.
Thank you.
Thank you so much for hosting me. Really had a great time talking with you guys, and really excited to continue learning from you on all the great stuff you're doing.
Oh, always use an expert.
Yeah. Oh, and build wealth and win the tax game with Mark Perlberg CPA.
There you go.
The game.
This episode of The Crude Truth is brought to you by Oil and Gas Workers Association, Sandstone Group, Air Compressor Solutions, Basin Fluids and the Fuel Pros, and